Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we will be checking the data precisely for the JPY. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, there are two important levels that we have to identify. The first one is the previous high. In fact, from here, what we can see is that all this previous move to the downside was created. So this is a quite significant level that we have good probabilities that this market might want to go and test before then creating a rejection lower. So on the monthly, we do have a potential upside target at this level. At the same time, however, we have to identify how the market is approaching this zone, and it is approaching it by rejecting this quite significant previous monthly resistance level that is now turned support. In fact, from here, all this previous rejection to the downside was created. After that, the market broke above the zone, and what we know is that in the market, previous resistance, once it gets broken to the upside, becomes support. So at the moment, the market is actually testing previous resistance turn support, rejecting it to the upside, and from here we could expect more bullish continuation. At the same time, we can also notice how this is actually a confluence of support zone, because as we have this impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg, and we can see how we also had the 50% retracement lining up precisely with this previous resistance turn support, creating confluence of support that this market is currently rejecting. So since we are rejecting a confluence of support area, we could expect a bit more bullish price action for the market to actually reach this previous high. Dropping down on the weekly time frame, what do we have? Now, from a weekly standpoint, what we can notice is that the market is currently rejecting previous weekly resistance from which all this rejection to the downside was created, which is now turned support. As the market is testing this previous resistance turn support, we could expect a bit more bullish price action, as we have already identified by looking at the monthly time frame, for the market to go and reach this previous high from which all this move to the downside was created. So also here on the weekly, it seems like a bit more bullish price action could be expected. And also here on the weekly time frame, we can notice how the market is rejecting another confluence of support zone, which is this level here. In fact, at this level, as we have already identified, we have the previous resistance turn support, but we also have, if we take our Fibonacci from the low to the high of this impulse leg, we can see how we also had the 50% of the Fibonacci taken on this impulse leg lining up also here precisely into this area, which the market has already tested, and inside of which we had good institutional longing, which pushed the price higher. And we will be speaking about institutional longing later on into the video as we check the COT data. Dropping down on the daily time frame, what do we have? Now, from a daily perspective, first of all, I did speak about USDJPY quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside, and in fact, that is exactly what the market gave us. And from here, I made another breakdown explaining all the reasons for which we could expect first this rejection to the downside and then the continuation higher. And again, that is exactly what the market gave us. And then from here, I made a full breakdown explaining all the reasons for which we could expect this correction and then continuation higher. And again, the market gave us that. And in the very last analysis, I explained first why after this M pattern we could expect a move higher, and then after this M pattern here, from here, why we could expect this rejection to the upside. And again, that is what the market gave us. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. Now, in a situation like this, as the one that we have right now, where we could be looking for the next potential move. Now, before we speak about that, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market, are doing. Now, if we check the data for the JPY, we can see how with the last reports, net positions have been decreased quite significantly. We went from having minus 98.7k net positions all the way down to minus 113k net positions, with 5,800 shorts added with the last report. Now, you have to keep in mind that all currencies on the spot are traded against the USD. So if we're checking the data for the JPY, we're actually already checking JPY USD. So if institutions are moving to the bearish side, so they are shorting JPY USD, it actually means that they are longing USD JPY. And that is why the price has been pushed higher quite aggressively. This is fueled by institutional longing. This means that as we have now broken structure to the upside, and the structure that I'm speaking about here on the daily is this previous daily resistance turn support, if the market will now go and retest this previous resistance turn support, inside of here we have good probabilities of seeing more institutional longing, which at that point would further increase the probabilities of this potential rejection to the upside for the market to reach the upside target that we have previously identified on the monthly and weekly timeframes. So if the market will correct to this area, how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here you have the possibility to get access to my entire courses with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and price goes back to normal. So I really suggest to go and check it out, and directly from here there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.